Hello, trading is closed on November 9th, 2017. Yesterday, we had some MEJT targets, and they printed. We had an old MEJT target from November 3rd. It printed. It was a support level and a resistance level. We looked for a pattern with an early low and a tendency to rally near the high of the day. That was the pattern we got. We said the overall chart action was positive, and the only thing that would kill it, what the bears needed to do, would be to gap down sharply, ideally undercutting this low, and that's what they did. During the day, MEJT said ultimately both lower and higher prices would print, which they did. Here it says ultimately lower prices will print. It also says the rally's false, the target's the same, 25.72.62, most likely to print tomorrow. As always, if we gap up sharply, it's probably out of reach, but absent that, that's my call. 25.72.62. This looked like a pretty good recovery, but when this pattern, which goes from low to high, has an early drop like this, it tends to lead to more negative action. It's also negative when you rally all day and you in this pattern and you can't overcome the early highs. In overnight trading, a new all-time high was hit. After hitting the new all-time high in futures, we gapped down under this high, under this high, under the intervening low, and even under the prior high. That's a rejection of the new highs. It would be invalidated if we promptly overtook some of these highs again. So far, none of these highs have been overtaken, and even these highs haven't been overtaken. That could all change early tomorrow if we gap up sharply, and if we're to avoid going down, that's what the bulls need to do. They need to gap up sharply. Now, it is positive that we gapped down, hit a series of lower lows, and couldn't hold on to any of them. It tends to be a positive pattern unless we invalidate it by undercutting this low promptly. I'll grant you it isn't as positive as it would be if we overtook these highs, particularly when the rally stopped at the MEJT resistance level, as you can see by these lines. There's a good, now here's the best chance the bears have had in a long time to show that the high's in. What they need to do is to undercut this low promptly. The market's way of showing a move is false is to gap under the extreme of the day. Like by having a gap under these lows, it indicated this whole rally was a false move. If we gap up and hold the gap over these highs, it would indicate today's action was a false move. That's what the bulls need to do. But if we don't gap up, the odds favor going down, hitting this price, and at that point it wouldn't take too much to go under this low, close under this low, and signal that the top was in. That's today's call.